Please get ready for a dictation from a write-up on main functions of Reserve Bank of India taken from jagranjosh.com. The material can be suitable for DDC skill and any other skill. 5 seconds. Start. Reserve Bank of India is the central bank of India. RBI was established on 1 April 1935 by the RBI Act 1934. Key functions of RBI are Bankers Bank, the custodian of foreign reserve, controller of credit, and to manage printing and supply of currency notes in the country. The Reserve Bank of India is the central bank of the country. RBI is a statutory body. It is responsible for the printing of currency notes and managing the supply of money in the Indian economy. Initially, the ownership of almost all the share capital was in the hands of non-government shareholders. So, in order to prevent the centralization of the shares in few hands, the RBI was nationalized on January 1, 1949. The Reserve Bank has a monopoly for printing the currency notes in the country. It has the sole right to issue currency notes of various denominations, except 1 rupee note, which is issued by the Ministry of Finance. The Reserve Bank has adopted the minimum reserve system for issuing, printing the currency notes. Since 1957, it maintains gold and foreign exchange reserves of rupees 200 crore, of which at least rupees 115 crore should be in gold and remaining in the foreign currencies. The second important function of the Reserve Bank is to act as the banker, agent, and advisor to the Government of India and states. It performs all the banking functions of the state and central government, and it also tenders useful advice to the government on matters related to economic and monetary policy. It also manages the public debt of the government. The Reserve Bank performs the same functions for the other commercial banks as the other banks ordinarily perform for their customers. RBI lends money to all the commercial banks of the country. The RBI undertakes the responsibility of controlling credit created by commercial banks. RBI uses 2 methods to control the extra flow of money in the economy. These methods are quantitative and qualitative techniques to control and regulate the credit flow in the country. When RBI observes that the economy has sufficient money supply and it may cause an inflationary situation in the country, then it squeezes the money supply through its tight monetary policy and vice versa. For the purpose of keeping the foreign exchange rates stable, the Reserve Bank buys and sells foreign currencies and also protects the country's foreign exchange funds. RBI sells the foreign currency in the foreign exchange market when its supply decreases in the economy and vice versa. The Reserve Bank performs a number of other developmental works. These works include the function of clearing house, arranging credit for agriculture, collecting and publishing the economic data, buying and selling of government securities and trade bills, giving loans to the government, buying and selling of valuable commodities, etc. It also acts as the representative of the government in the International Monetary Fund and represents the membership of India. On July 6, 2005, a new department named Financial Market Department in Reserve Bank of India was constituted for surveillance on financial markets. This newly constituted department will separate the activities of debt management and monetary operations in the future. This department will also perform the duties of developing and monitoring the instruments of the money market and also monitoring the government securities and foreign money markets. So it can be concluded that as soon as our country is growing, the role of RBI is going to be very crucial in the upcoming years. Stop.